Hey guys, this is Chami. I'm just bringing to you the first getting started video, where I'm basically just going to explain why I target clean and simple bases over anything else, and kind of demonstrate to you just the kind of power they can have by taking such a simple approach to the market. I don't follow any complex patterns, not saying they don't work, it's just these have worked for me, so that's what I stick to. But basically, like, why I love bases so much is they give you very on the daily, they give you like very precise entry points. So you know that if you're above that line and the stock closes above that line, it looks good. If it breaks above that line and then closes back below that line, or dumps below that line, or whatever may happen, it's not good. So it's very easy on the mind to make those decisions. You don't really, there's no time to really, you don't want to let your emotions get involved, and that's what I like about this. It's a very simple system to follow. But basically, like, why do we want to focus on clean, simple base entries? Is also because everyone else can see it. So obviously, we're not the only traders that are going to be trading um, that pattern, and patterns that are easier to see, like this, where it's basically a cup and deep handle, a lot of different traders are going to see that. So the more eyes that are seeing what you're seeing, the more likely that there's going to be power going through that pivot. So it just increases the potential that people see it and are going to buy it also. So I also just kind of want to get into the different types, and there's basically three different types that I focus on, and that's the downward sloping trend line, which I'm going to show you examples of all of these, just so you can kind of train your eyes and have a good understanding of what I'm talking about. And then there's also the flat base, and then finally the cup and handle. Um, Generally, the flat base and cup and handle are the strongest, but downward sloping trend lines could work just as well. Um, Once we have a breakout from our plain and simple base, we want to see that volume surge. That's, I'm sure I've gotten annoying by now saying that, but it's really like important. It tells us that they don't other traders don't only see it, but they're also acting on it. So that's reflected within the volume. So when we're breaking through this pivot here on AMD and we buy right at that pivot point, you see that massive surge in volume. And that's telling you that other people are seeing what you're seeing and they're acting on it. So it gives you a lot more conviction to start that position in the first place. But basically, something to just keep in mind is that charts are like they're a reflection of human emotion, supply and demand. It doesn't matter how old a chart may be. Human emotions don't change. So you're going to see like some charts here that might be a little older. It doesn't matter. It could be 10 years old. It could be 20 years old. It, People are always are going to have the same human emotions. Are always going to be that chart is always going to be impacted in the same way based off of how they are feeling at any given day. So there's fear, greed, panic, complacency. Like they all take into account in the charts. So we look for clean and simple bases and nothing fancy. Just the goal is to buy right, sell some at the strength, and then let that position ride out as long as humanly possible. In all these moves, we're not looking at like 5 minute charts. We rarely look at 10-minute charts. We just focus on the daily, some weekly, hourly, 30-minute, and that's it. I just try to keep it as simple as possible. Okay, so also just want to point out to everyone that this is the 8 day EMA. This is the 21-day EMA. This is the 50 SMA, and this is the 200 SMA. These are just moving averages for anyone that doesn't know. And generally, what people will use these moving averages for is to enter a trade and then to use it as a guide on when to exit a trade. Everyone has a different system as to how they use them, but generally, that's how you use moving averages. Now, this is your short-term moving average. This is your medium term. This is your intermediate term, and then this is your long-term trend. So generally, if a stock's above the 200 SMA, it's in an uptrend. If it's and it's bullish. If it's over the 50, it's in a uptrend, bullish. And then these are like the short-term indicators. So depending on if you're a short-term trader, and then generally people use the 50 SMA if you're a more medium-term trader. So say you were to buy it off this 50 SMA bounce, you would still be in it right now. So you bought it at 78, and you would stay in it until it either breaks below that 50, or dependent on how you choose to play. I'm not sure. However, you would use these short-term moving averages. Maybe you would sell some here and then sell the rest here. It's all dependent on the trader. But for me, I use the 8 and 21. It's kind of important to know that because that's my trading style. But let's kind of look at some examples here. So first, we have AMD. So here's a nice flat base, almost a cup and deep handle. It breaks out. You buy some here. You continue to accumulate your position here. Then you can start to sell some into strength, and then you use that 8 EMA as the next time you're going to sell. So it sells below or drops below the 8 EMA and closes there. You would sell some here at end of day. Then you see it. Then the next time you're going to sell, and you can sell entirely of your position, is when it breaks below the 21. So then AMD closed here. It closed right on the 21. So that would have just been based off of the personal trader's decision if you want to hold it or not. I did hold it. So I was holding at this time 25% of my initial position size, and then I ended up selling the rest here. So you buy right, you sell some into strength, you then sell into the 8 EMA break, and then finally the 21 EMA break. So I had four initial buy, three other buys this day, sold some into strength here, here, and then here when it loses the 21, and then I'm out of the position entirely. So that was like basically a month trade, but by the time I was here, I already had 75% of my money back and the profits. So you barely let the rest of, and also this is with shares. So with options, it's a different ball game. I don't trade with options, so I don't really have a system for that. I guess for future reference, whenever you're looking at my watch list videos, if you're ever breaking through a flat base setup like this, which you're gonna understand what these look like more as we go through the video, maybe if you normally buy 2 contracts max, being your max risk, you would buy 2 contracts. And then if I were to ever demonstrate like a pullback setup, like say right here, these tops right here, it could have been a pullback setup. You would have only bought 1 because it's a more aggressive buy. It's a lower probability setup. So you need to make sure that your initial position size going into whatever trade you're looking at is dependent on the probability of the setup. So flat base setups have higher probabilities, and then pullback setups have lower probability setups. So just something to take into account for. So this is a flat base setup. That's your example. Great numbers. Once again, good secondary ratings, forward estimates. RS rating at the time it was breaking out was going to 52-week highs, which is exactly what you want to see. Here's CyberRack. So here we go. Nice flat base setup. Breaks through the pivot and it runs. It goes from 100 and whatever 10, 15 up to 167 in just 4 days. So numbers were rough, but secondary ratings were decent. Forward estimates were rough. RS rating was skyrocketing though to all-time highs. You could obviously, this would have been, although it's a flat base setup, since the numbers were kind of lackluster, it still would have been a little bit higher risk of a trade. So you wouldn't have entered with as large of an initial position, but it panned out perfectly. So once again, the power of flat base. Here we have EC. So this is a nice downward sloping trend line, which is a simple setup, simple base. It breaks out here on a pickup in volume, and then it just runs. It's basically almost double your money. So you would have bought here, you accumulate, and then you just ride it. You let that 8 EMA guide the trade. I probably was selling up here, selling it to strength, and then by the time I was up here, I mean, it's so extended, there's no way you're adding. So you just ride the rest with your position. It breaks below the EMA, but it closes above, so you don't need to sell. It breaks below it again the following day, but closes above. So you hold, you hold, you hold. Then you sell some up here. Or excuse me, you're not going to sell any up there. You're going to sell some when it closes below right here. And then finally, you're out of your position in full when it drops below the 21 EMA. So not only am I trying to help you guys visualize what to look for, but also how to kind of manage that trade. It's simple rules for me. Is I'll buy at the right time. I'll sell into strength again. Then I'll sell at the break of the 8 EMA, and then finally the rest of my position is the break of the 21 EMA. Now obviously not all flat base setups are going to act like this, but the majority of huge moves are going to have a nice base setup with consolidation, tightening of price action. Just there's certain characteristics you have to look for, and they generally happen within a flat base. Here's Ford. This is a trade from earlier this year. We break out of this downward sloping trend line. You would have entered here. You probably would have got shaken out. I bought this gap up right here, so it didn't close the way I really wanted it to. There wasn't a whole lot of conviction, so I was with a small position. The next day it fired up, so you could have added some here. I don't remember what I did. Then I remember selling some here because it didn't look good. But you do want to keep in mind that it was up here on huge volume and then pulled back on lesser volume. So that is still constructive. And then you just end up sell some here, you sell some here, you sell at the break of the 8 EMA, you're in, and then you're out completely. So that's what, 1290 to like, it's almost a 30% move in just a couple weeks. So you just keep it simple. Downward sloping trend line. RS rating was moving up. Numbers were increasing. This is after this move. And then this obviously at the time that the stock was breaking out was with strong rating as well. The estimates were good. So do keep that in mind. These are old screenshots, so these ratings and numbers may not be where they were at the time that the breakout occurred. Okay, here you have Diamondback Energy FANG. This is a wild boy. It really moves crazy, but here you have a nice and simple base, downward sloping trend line. It breaks out on an increase in volume. That's always what we're looking for, is that volume surge. You want to make sure that other people are seeing what we're seeing. You could have accumulated a whole position in this one day, to be honest. Generally, when you're building a position, you're going to buy that initial position, and then when it's up 2%, you're going to add another 30%, and then when it moves up another or further 1.5%, you're going to add the rest of your position to 20%. So that would be building, you buy 50 here because you like the setup, you like the volume coming in, so you're feeling very confident with the trade, so you're willing to put on a larger amount of risk. So you buy that 50%, then maybe it moves up another 2%, you buy another 30, and it moves up another 1.5%, you have now a full position. You buy that final 20%, and then you ride it. So obviously when a stock is extended like this too, that's when you want to be thinking of selling some into strength, because more than likely a stock, when it blows like this, blows up to the upside, it's going to need to consolidate a little bit, and who knows, they could have, I don't know the future, it could have just broke down right here. So you sell some here on the candlesticks that have a little less bullish action within, and then you sell some here, and then now that you're out of half of your position or 40% of your position, you already know that you made some profit on that trade, and it eases the mind, and then you just let the EMAs finish the trade out for you. So then we close below here, sell some, and then finally we close below the 21 and we sell the rest. So 113 to final position exiting at around 125. Futu. Okay, so here's another example of a downward trending slope. Just a simple base. Breaks out here. Not a ton of conviction, so probably would have started with a smaller position size, but there was a pickup in volume, which is good. And then this one just absolutely ran. This is when all the SPACs were like really popular. Like it was like last year when just the second a SPAC came on into the market, everyone wanted to buy it because they knew how like volatile, how it was almost like the meme stocks of 2020. But yeah, so you guys are kind of understanding how you would like buy and sell into strength and then use the EMAs. Now I don't want to keep repeating myself. I just want to help you guys give some more examples of the bases. So uh, here we have IIPR, breaks out of a flat base right here, downward sloping trend line. It runs. Uh, I don't have any numbers to show, but you gotta trust me, they were good at the time. Otherwise, it wouldn't have been on my watch list. We have INMD. Once again, little inverse head and shoulders here. Uh, Downward sloping trend line. It breaks out on a volume surge. This would have been a very easy position to build because it basically breaks out on a volume surge. Then it's forming a nice secondary base or bull flag on a decrease in volume, which is extremely constructive in a bullish moving stock. So then it breaks out again. So you could have bought your 50% here, and then this is an add-on position here. You can do 30%, and then you wouldn't want to add any more up here because you're gonna bring your what's the word I'm looking for? You're gonna bring your average buy price up way too much, um, and then you just gotta manage it from there. So something that's important is even if you have a sound trading system, like knowing when to buy and stuff like that, what's really important, what really makes a trader profitable versus the rest is that he knows how to properly manage the position. And you try to eradicate your emotions at all costs when it comes to trading. I've learned that the hard way several times. I've blown up, I think my account twice before I really started to uh, cement into my mind just how I would really look back at like what was causing these substantial losses, and it was just that I would get too anxious. So that's also another reason why when you enter a position, you should always look at the setup and determine based off that setup how much you should be risking because it's going to weigh on your mind, and if you're anxious, you're not really thinking straight. So you're going to make bad decisions, and then you're going to be pissed at yourself for making those bad decisions, and it almost snowballs into your trading the following weeks, months. Like some people, they just quit because of that. So it's really important to look at the psychological aspects that come with trading too. Here we have LPI. Now these are commodity trades. I'm not really a fan of commodity trades just because of how um, crazy they can be at times. Like one can break out like this, and next they can dump like 20%. But at the time that this was happening, this was when like inflation talks were huge. So it breaks out of that flat base. This is a nice little handle here. So basically what happens is people are buying up here, and then they hold through all of this. You then have traders entering down here, trying to catch the move up to the resistance. So then once you get back up to that resistance, what forms the handle is, I mean, you got to think of it. Do you think that these people that got in at 44 and then we're down like 20, 35%, we're thinking up here, damn, I can't believe I just got out of that break even. So then they just sell? I think so. And then same thing. These guys down here or down here that bought move up 20%. It's a 20% move. They're like, wow, I can't believe I just made 25% in a couple days. They're selling too. So then you have like that handle that forms of just there's people that were trapped up here and the people that bought down here selling, and then institutions accumulating in that handle, and then it finally breaks out. So um, ride that EMA. You would have sold some here, and then you would have sold the rest here. I mean, these are just spectacular moves. These are the ones you're really thankful for because these are the ones that can change your life. You put a $15,000-$20,000 position here, or if you buy one option contract and you just ride it all the way up, or even to right here, like you're making a lot of money. There's a whole lot of potential in following these setups. Here we have, this is another commodity trade. This is Magnolia Court. This was just a nice little downward sloping trend line. It breaks out on a pickup in volume. The volume was an increase over the last, literally months. So that shows a lot of conviction. You also see that RS line is breaking to new highs, new 52-week highs. Um, just looks great. You could have built a whole position in this candlestick. You ride it up, you would have actually got stopped at right here, to be honest. But hey, I thought that one looked a lot better. I didn't realize that that trade was not amazing, but it was still like a 10% move, so it's got to count for something. If you had diamond hands and you used if you were a medium term trader though, you would have bought right there. You would have still been in all the way up to there. But that's not me, so I'm not gonna act like it was. Here's match group MTCH. Clean and simple base. It looks like almost like a cup and handle, maybe like a skillet. It breaks out here on a surge in volume. Is that? I can't match it up. I think so. It breaks out on volume here, or it may have been right here. Um, it's not that it's really easy, but once you train your eyes, you start to really pick these things out. Rides up, has a huge gap up. Selling some into strength probably here. You're definitely selling some here, and then you use that. Now that you're out, you made your 2 initial sells into strength, which keep in mind that's not always the case. There's plenty of stocks where you don't even have that opportunity. You just lose the trade, which is fine. You make sure you don't need to wait to exit a trade until you sell into strength. That would be ridiculous, which I'm sure you guys know that. But then finally, you would sell some right here at the first break of the EMA, and then finally when you break that 21 EMA. Here we have MU. So MU broke out of this. This is a nice, so the longer the base, generally the more powerful the breakout can be. So that's something you want to take into account of. So it breaks out here. You ride it up. You're actually stopped out right here. Actually, you're not. You're out of most of your position here, but you let the rest ride out till all the way up here. So worked out nicely. Neo. Oh my. Now this was probably my biggest trade last year. This and Tesla. So it was just making a bunch of different it was like a stair stepper setup. So you bought some here. You bought some. Yeah. So you're accumulating a position here. You sell some. You sell some. Well, actually, then you're out completely. But it's still from 15, 45. You sell up. This is a 25% move, and then you have the opportunity to buy another breakout, and then it has a beautiful setup here where it just makes a nice decreasing volume flag, and then you could buy that gap up. So obviously buying gap ups is risky, but if it opens right here and you buy it immediately, you just use the low as your stop loss. So even if you're adding on, say you have a 50% position here and you want to add on a 30% position here, even though that's a huge gap up, so I didn't do that, but you could have. You would just make your 30% position have its own stop loss. So you're not gonna say it breaks below the low, you just sell the shares that you just bought, but you keep this position down here, if that makes sense. So right at the, I already have 50 shares here. At this open, right at the open, I buy 30 shares, and I use my stop loss for those 30 share independent shares as the low of the day. So then, if it doesn't break like it didn't here, it ran up another 25% in 2 days. Then it has a nice pullback with decreasing selling. The selling days were on decrease of volume. Oh, right here. Oh, so it's on decrease of volume again. So just a huge, beautiful setup. Then you could have added the additional 20% here. This trade actually I was in margin, so I didn't have 100%. I actually had more than that. I had like 150, 200%. So once you start to really get a feel for when a setup or the stock's movement, its characteristics are really bullish, you start to develop more confidence on when you could put on margin. So if you're an options trader, if you were to put on margin, it would basically just be like, say you only normally buy 2 contracts, you would have bought a third. That would have been your margin. And then it just runs. And then all right here, it's just churning. It's where there's tons of volume here, but there's no movement to the upside. And then here, it was just a huge reversal candle, and that started it all. Here we have Nucor. This is a recent trade. So here you bought this breakout here. you're in it all the way up here. You get stopped out, and then the next 2 days, you get to buy it again, and then it runs another 20%, and then you stopped out at 105. The numbers were super strong. This is June 30th. Oh, that was after. Okay. And actually, right here, I played this too. This is a cup and handle. Right here. Just like that. You buy that breakout. So it went from like 110 to 130 in 4 days. Sell some, uh, some more here, then you're out. Okta. Right here, we have that nice downward sloping line. Breaks out. You just use the EMAs. Roku, same thing. I don't want to take up too much of your time, so I kind of want to wrap it up here. So breaks up on a huge surge in volume. You could have bought that gap, right? Gap up wherever it started, and use that low for your stop loss, and then just rode it all the way up. Shutterstock, same thing. Nice flat base. Breaks out on an increase in volume. You just ride it up. Use the EMAs as your stop loss. Tesla, yeah. So this was another one. It moved just like Neo. Actually, it was even more volatile than Neo. If you see that huge drop, but you would buy here, use your EMAs. You could have bought again here. Just use your EMAs. This one right here, actually, I have a buddy that made close to $1 million on this trade right here. I mean, you're going from $400 to $900 with a mixture of options. So potential's there. Vive, you break out. You have a double bottom. You break out. This was a little sloppy of a breakout, so I got shaken out completely. But I do want to put it on here just for an example of how the bases could work. And they're not always pretty, but doesn't mean they can't work. It goes from 80 to 105 in a couple days. This huge surge in volume kind of like it's like indicative of a climax. So you definitely want to be selling some here, and then it ended up just dropping. So Yalla, downward sloping trend line, breaks out, ride the EMAs. Oh, that's it. So I don't really like want anyone to think that I'm trying to make like this look easy. Like obviously trading is it's tough stuff, but if we just need to find, identify, execute, and like manage our trade properly. It's a process, and my goal is just try to help it speed it up for you guys. Um, like that learning curve. I still myself like study. I study these charts too. Like study like the past winners, just to really hone my skills on like what to look for. And like for me, it's fun. So, but it's like a treasure hunt to be honest. And like remember, if a stock fails, just be a good seller. That's what's really important in the market. Um, to keep the losses as small as possible. And something else from a psychological perspective is if you lose on a stock, just take it off your watch list for a couple of days and don't dwell on it because it's going to happen to everyone. The best traders, I've read so many books about the stock market, and there's all the top traders like I read about like Mark Minervini, Stan Weinstein, Bill O'Neill, Jesse Livermore, um, David Ryan, people of this magnitude who've made millions have gone from a $100,000 portfolio to managing a multi-billion-dollar hedge fund, have taken substantial losses, but they all just know how to handle it from a psychological perspective. No revenge trading. Uh, start if you're having consecutive losses, start entering trades with smaller initial positions. A lot of people want to make back what they lost, so the next day they'll enter with a huge position and get clobbered again, and it just snowballs um, your poor decision making. Uh, it's just not constructive. Uh, so we know what to look for technically and fundamentally. The strong numbers, strong secondary ratings, flat base setups. Most people don't know what to look for. I'm not trying to be arrogant. I'm just saying, like, from what I see, a lot of people are just kind of playing stocks to gamble. They're not really taking it seriously. I don't take trading it. I don't treat it as a hobby. I treat it as a business. And it was right when I kind of changed my perspective of the markets to that degree that I really start to make money. So, um, there's gonna be plenty more opportunities to come on the horizon. Uh, I'll keep you guys posted with the watch list. I hope this kind of helped you guys like recognize. I need some water. Buddy's voice is cracking. Um, I'm hoping this helped you guys see at least what I'm looking for. Doesn't mean you have to trade it, but I want you guys to see the potential of such a simple trading style. If you guys have any more questions, just feel free to reach out to me. I'm gonna put out like a series of different videos that address different things like this, um, how to buy into strength, uh, how I would trade options with these setups and build positions with options. If people are interested in shares, I'm obviously going to incorporate that as well because that's my strong suit. And if you guys have any other questions about anything um, that you guys would maybe like me for me to elaborate on, I'd be happy to. So just let me know. So thank you for your time. I hope this video was helpful for you guys, and you guys have a good rest of your afternoon.